Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation where our focus is on Tata Communications Q4 earnings. Well, on a profitability figure, we have seen a stellar number from the company at 223% year-on-year spike in the net profit to over 1,040 odd crore rupees for the fourth quarter. That's largely driven by the robust growth in digital fabric portfolio, which we will get the details of in our conversation with the top management in a bit. We also have seen that the company's revenue from operations have seen a 6% surge year-on-year to 5,990 odd crore rupees. At the operating level, EBITDA has seen an uptick of about 4.2% to 1122 odd crore rupees in the fourth quarter as well. What we've also seen is that the EBITDA margins, however, have dropped to 18.7% in the reporting quarter versus 19.1% in the corresponding quarter of the previous fiscal year. Now, the company has stated that all the components of the digital fabric offering have actually posted high double-digit growth through the year. Consolidated revenues for the fiscal have also grown by over 11% to 23,109 odd crore rupees as well. Let's in fact welcome the top management of the company to highlight for us the key growth factors and the outlook going forward from here. Mr. Amur S Lakshminarayanan, the CEO and the MD of Tata Communications, is with us for this conversation. Thank you so much, Mr. Lakshminarayanan, for taking time out to talk to us about your quarterly performance. Stellar growth on the profitability figure, but a tad bit lower end as far as the margins are concerned. How would you sum up your quarterly earnings for fourth quarter, sir?
It's been very, very good. We have seen, as you said, the data growth has been very good both on a sequential quarter basis as well as for the full year. Our digital revenues, particularly on a full year basis, we grew 29.5%. We have nearly doubled our digital revenues compared to FY23 in the last 2 years. We've crossed 9,000 crores of digital revenues this year. One of the markers that we had set when we launched our Reimagine strategy in FY2020 was to get our digital revenues to be close to 50% of the overall revenue numbers. And we are just almost there in touching distance to that goal. It is an important marker because it signals a fundamental change in who we are. The DNA of the company is shifting to more infrastructure, software, platform, and those capabilities is something that we are working very hard to build. So we're very pleased with the revenue growth numbers, and it's been a secular growth across all India, international, by various products. All of the products and all cylinders have fired this quarter. So it's very pleasing. On the profit front, yes, it's been a good show. The board has declared a 25 rupee dividend, which is the highest ever done. So all around, I think it's been a stellar quarter for us.
How would you look at the performance sans this exceptional gain that you've got because of the sale of the subsidiary Tata Communications Payment Solutions this time around, sir? So looking at, minusing that exceptional gain, how would you judge the performance?
So coming to the EBITDA margins, which then flows down to all the numbers of EBIT and cash flow. The EBITDA margins we reported at 18.7%. So I want to give a bit of a color to this, where we had said that we acquired 2 companies, Kaleyra and The Switch, both in the US and having international presence, to strengthen both our media business unit as well as to strengthen our interaction portfolio.
Okay.
And those units, we are still working through the cost synergies, and you will see the execution of those cost synergies playing out in the coming quarters and the year ahead. If I remove those 2 acquisitions, which at the time of acquiring itself, we said that they were negative EBITDA and therefore will be dilutive for a while. If I exclude those 2, the rest of the business, we are still operating at around 23% EBITDA margins, which is in the range of what we said we would be operating at. So fundamentally, our business is in a good place from a margin perspective. These 2 acquisitions drag down the margins, and we are working through that. And we will see the uplift from these coming through in the coming quarters in the year.
Absolutely. So just wanted to get a sense on the margins front. I think you had, estimated that 20% is what you would end the year with. That's not happened. So how would you really look at the forward guidance from here on the margins front, sir?
Yeah. Again, it's the same answer, Sakshi. I think the cost synergy programs and the acquisitions are well underway, and we should see the results. The second drag in the margins have been on two fronts on the core connectivity, right? So the core connectivity is the big capacity pipes that we connect with data centers globally and nationally within India. The core connectivity growth has been somewhat muted this year. And core connectivity is a capex heavy business and also a high margin business.
Okay.
And lack of growth in the core connectivity meant that the overall margins therefore had an impact. The second impact that again we had in the core connectivity is more customer specific or segment specific issues that we had in Bangladesh, and because of that, there were some drops in the margins that we had to take a hit on in the core connectivity front. So in the core connectivity front, we had a double whammy of not as much growth as in the past years, and also the Bangladesh customer specific issues that we were hit with. Plus, we had all the cable cuts this year. Repair, the operations and maintenance costs on the core connectivity had gone up. So these are some of the factors why we see that the margins have dropped. But structurally, I don't see any reason why we should not be gunning for the 23 to 25% range that we called out in the medium term.
Fair point. Mr. Lakshminarayanan, if I have to understand a little bit on a forward-looking basis, both on data vis-a-vis voice, what is your expectation on the basis of, say, a CAGR growth on the EBITDA level that we can expect over the next 2 to 3 years?
I don't want to give a forward looking, but I think what I just said now, that the 23 to 25%, if you are at 18.7, we
Yeah.
will get to the 23% to begin with in 18 to 24 months' time. And that should give good confidence that structurally we are in a good place. As far as the revenue growth is concerned, the macroeconomics are where it is and what it is. But we have invested in our products and strengthened our products across all the portfolios, whether it's a network portfolio or the cloud and security, where we launched our Vayu Cloud a couple of weeks ago, and in the interaction fabric, where we launched the Kalera AI, and the IoT fabric, we are investing to make the connected vehicles even more intelligent. So these are investments that we are making in these fabrics, and we are very confident that these investments will pay off in the medium term as well.
Okay. So give us a little bit sense on how are you looking at the macroeconomic trends, how they're shaping up at this point in time. How is the discretionary spending looking at? There was some sense of the challenges persisting for some time. Delays, are you noticing any on the discretionary spend at this point in time? How are you judging all this, sir?
Um, Not something that we can judge immediately. In the short term, our customers are cautious. Um, we can't read anything from the order booking that we have booked that there is any immediate reactions from the customers. But from our funnel additions that we see this quarter, our overall funnel additions have improved, but the number of large deals in the funnel have not increased as much as in the past. So while the overall funnel has improved, the large deals have not improved. So that might be a sense, one sense that we get, but it's too early to call on this. Our customers are cautious, but nothing immediately as a knee-jerk reaction where they are canceling things or stopping things is what I get a sense from
Okay.
current.
Okay. And domestically, sir, on the AGR front, what is the latest conversation? How are you reading into that? And what could be the potential implications then?
The AGR is something, it's sub judice. Everyone is aware, and that is the reason why we put that in contingent liability. We were hoping that some of the issues relating to interest and penalties, which is a very large component, we would get some relief as where other players in the field were expecting. That did not happen. We are still hopeful. But that is something that we are very keenly watching to see how we resolve that. But there is nothing more to say because it's sub judice for us.
Okay. Sir, share with us an outlook on your international business. You've been marking that. How does that look for the year which has just started off?
We last year, we grew very well in the international business on the back of the large the deals that we have booked. We anticipate the international business will continue to do well because we are a challenger in the international. In India, we are a market leader in the B2B space. Internationally, we are a challenger, and therefore we are even at good times we are taking market share from large incumbents in that space. And in this time, we will work even harder to take that market share from the incumbents. The issue we typically have is the customer inertia because the network particularly is seen as a live wire and they don't want to touch it. And that's the inertia that we are fighting against. But we have good case studies, good products now to go after these as well. So our international, we expect to do very well in the coming year.
Absolutely. Now, also wanted to just get a sense of your collaboration with NVIDIA and on JLR. So, if you could shed some light on that as to how do we see that going forward?
No, I'll take the second one, the JLR first. We just completed the large network transformation, network security transformation for them. It's been again flawless execution thanks to the hard work from our people as well as the support from our client. They were just mentioning to us that the previous time that they had transitioned such a large network change, it took them more than 3.5 years to get that done. And we have now completed the project in 16 months' time. So it's absolutely great to hear
Okay.
such comments from our customers when they see such transformation programs executed flawlessly. They are going to be saving a lot of money as a result of this, and also it's going to make all their the customers the data exchange that they do also secure. The remote workers, their suppliers connecting to the network to exchange data, all of them is going to be a lot more secure. So no, that program is going very well. And JLR, as you know, we are working on multi-fabric with
Yes.
connected cars and the network and security and other areas. To your other question on NVIDIA, we have a very good partnership. We have a fully certified NVIDIA stack, which we launched as a Vayu Cloud, and it's got infrastructure as a service with CPUs and GPUs as a service is what we've launched with support and partnership with NVIDIA. But our uniqueness comes from the fact that we have built our entire cloud on a liquid cool platform, which is very unique, and we are the first in India to do so, which means that we are going to be a lot more energy efficient as well, and being kinder to the environment. And we are offering our cloud at the best price performance compared to anybody else. Coupled with that, the AI Studio on top is going to make it a lot more easier for enterprises to experiment, build AI models, and deploy at scale at best price performance. So we are very excited about the product that we are launching.
Absolutely. Sir, do tell us, expound upon your own internal growth targets now for top line, bottom line for the next couple of years, if you can share with us. We have already seen your fiscal year revenues at 23,109 odd crore rupees. What is the incremental growth that you're penciling in for the next couple of years here? And also, if you could help us understand whether you'll be looking at inorganic opportunities to look at achieving these growth goals of yours, sir.
Our targets are always ambitious. We said that we wanted to double our data revenues, which means that we have to hit the 28,000 crore mark as the first goalpost, and we are still keeping and working on that target. On the and there are a number of investments that we are doing organically. As I said, in every fabric, we have launched something very new and exciting, right? And we're working on that. On the inorganic front, we are constantly looking, as we said before, as part of our strategy, we are constantly looking. when there is a right opportunity that helps us to expand our capabilities in the product, or helps us to expand our capabilities and footprint in another geography, we would definitely look at those.
Okay, fair point. Well, thank you so much, Mr. Lakshminarayanan, then for this conversation and explaining to us the key factors that have gone behind the growth in this quarter and the outlook going forward. I wish you all the very best for the upcoming quarters as well. And here's hoping to get in touch with you yet again on another quarterly.
Thank you very much.
Thank you so much. With that, viewers, we wrap up this special conversation on Tata Communications, the earnings that have come in. You've understood in great detail from the management as to what have been the key factors contributing to the profitability and the revenues, the way the company is really looking at doubling the data revenues as well going forward from here. And ambitious targets are being set, yet at the same time, they are looking at the macroeconomic space as it is developing. And it's difficult to judge at this point in time, but, they will be looking at how things shape up from here on. A lot of insights for all of you in case you've been holding onto the stock. Do listen in again to all the comments that have been made to understand, on a 360-degree way, the way the management is approaching growth as well as the ambitions going forward. Many thanks for being with us. Do stay tuned with us on Business Today Television. We'll continue to get you such fascinating insights from the world of earnings.
If you like the video, do like, comment, share and subscribe.